What's going on, everyone? In this video, we're going to talk about how you can start maximizing your profits by really understanding the realistic risk that goes involved with trading the specific stock or asset that you are looking to day trade. Now, first things first, a lot of newer traders or people who maybe, been trading for a couple of years but haven't really understood how to be consistent and profitable, don't have realistic expectations as far as risk management when it goes to how much risk they're actually going to allow themselves per trade. Okay, so we're going to be using NVIDIA. We're going to use the 5-minute time frame. We're going to use one of my strategies that I teach in my Discord for this particular example. Now, the reason why I'm going to bring up NVIDIA is because of 2023. NVIDIA has been one of the hottest stocks in the absolute whole entire stock market, right? I don't think anyone can really argue that. Now, there's a lot of people who want to just get into NVIDIA. They want to buy wherever, they want to buy every single dip. They don't really have a trading strategy. They just see other people making money trading the stock and they want to get in, and they have no idea what to really expect. It's not until they throw their money in an options contract and now they're down $1.50, $2, panic sell, take a loss, and then next thing you know, it continues to go in the direction where they thought it was originally going to go, and they're kind of scratching their heads wondering, how come everyone seems to be making money and I'm the only one losing on this stock? So what you need to understand is, first things first, is you got to evaluate your account size, right? So if you've got a $500 account, there should be no reason why you're trading almost a $500 stock, especially on the option side of things. The premiums could be juiced on some certain days. You could be looking at $300, $400, $500, $600 for one options premium. God forbid the trade goes against you and you have to take the loss, because that's the name of the game. Sometimes we do lose out here. But you can take a 20, 30, 40% loss on a particular trade if you're trading oversized, meaning you're trading NVIDIA on a $500 account. One trade could be down 200, 250. It's only going to take 2 or 3 trades before that entire account is blown up. You didn't even get to trade enough. You didn't even get to run a series of trades to actually see what you need to work on or what you need to kind of, dial in a little bit more, right? So I'm going to be speaking to people that can trade NVIDIA. Maybe you've got an account size of 5,000 or 10,000. You could definitely day trade a little bit of NVIDIA. I wouldn't go recommending to go buy 10 contracts of NVIDIA, but maybe trade 1, trade 2, kind of dabble in the dark arts of trading one of these high flying NASDAQ 100 stocks. So what we need to first understand here when it comes to trading stocks and knowing when to take profits, because this is actually going to save your ass more than it's going to burn you, right? So a lot of times in my Discord, when I'm putting out a trade or a potential idea, or I'm getting into a potential trade here, I already know, because I trade the same names each and every single day, how much money I'm looking to take off the table. So for example, and I preach this a lot on stocks like Tesla and NVIDIA, I'm looking to take $1, $1.50, $2. I consider that a home run trade for myself and my strategy, especially when I can take that, in 5, 10, 15, 20 minutes. That's a phenomenal move. And the reason why I came up with, those exact numbers for these specific names is because, for one, I've taken thousands of trades of these specific ticker symbols, but also because of the ATR, right? So the average true range. We have to understand, if we're playing and taking an entry on a 5-minute time frame, okay? I don't care, regardless how good the setup is, what everyone on social media is saying. If you're expecting, in 5, 10 minutes to make $5, $6, $7, $8, it's just not realistic. Okay. So that's a lot of times where traders get into a play on a good setup, and next thing you know, they're holding too long just due to the fact that they're trying to squeeze all of this water out of a rock, when realistically the stock doesn't move that much on a minute by minute, 5-minute by minute basis, right? But on a candle by candle basis, it doesn't move $4, $5, $6, $7, $8. Although NVIDIA can move, $10, $15 in a day, a lot of that is just a lot of continuation. Hopefully you're holding runners. You've already secured some profits, moved your stop loss to break even, that sort of deal, right? So if we kind of look at the average true range here on NVIDIA, we're talking about an average true range here of around $1.20. We're talking about an average true range here of around $2. We're talking an average true range here of around $1.90, an average true range here of around $1.50. So how do you use the average true range to your advantage, right? This is going to come with time. I'm not saying you need to get fixated on watching the ATR and trying to get it down to the penny. You need to have a general idea, right? So if I just gave you a few ideas here, different times of the day, ranging between a price of $1.50 to $2 to $1.90. If I can get into a setup that aligns with my strategy and aligns with my trading plan and my rules, and I can take $1, that's a hell of a move. If I can capture $1.50, even $2, which we just went over here, is the average true range of the 5-minute time frame on the video, then you're doing a hell of a job. Even though we can lose $3, $4, $5 on the stock can go down from a price of $4.52 down to $4.41. Of course that's more than $1. Of course that's more than $2. But sometimes you don't get that, and sometimes you hold too long, and sometimes the trade comes against you. Me, I am in the business of identifying a move for a technical reason, getting in and getting out as quickly as I can. That way I can put my feet up and not have the stress of holding something all day and hoping that it comes back, or hoping that it continues to fall, or trying to scour the internet for news, figuring out a reason why this trade can potentially continue to go in my favor. I'm not about that. I'm looking to get in and out within realistically between a minute and 30 minutes. My trades generally, unless it's a runner that I'm holding, typically don't last between, any longer than 5 to 15, 20 minutes at most. And that's probably 70% of the trades that I take. Okay. So if we just look at this basic situation here in the pre-market, we do close below the 20-period moving average. There was a clear setup here to take a trade below this pre-market low on Friday using a 1-bar stop. What does that mean? If I'm going to use a 1-bar stop, I'm going to put my absolute max pain hard stop loss over this candle that just dropped below the 20-period moving average. On the next candle, if it does confirm and it starts to break below that, I have no problems taking a trade right off the bell. Why is that? Because I know that if it closes back over my hard stop loss, I'm out of it, right? And I already understand, for doing this for so many years, that I am going to lose trades. These trades are not always going to work. These trades are not always going to be nice continuations that are going to go down 10, 15 points in a day. I understand that, but it's a probabilities-based business. So basically, let's put some calculated risk on the table. Let's manage our trades like a big boy or a big girl, and let's continue to throw these darts at the board here. The whole name of the game is taking risk and also managing that risk and making sure you have an edge. If you don't have an edge and you're just buying just to buy and selling just to sell, you might as well turn off the computer screen and close the door and get out of the room now, because this is not going to help you. You're just gambling anyways. So basically what we need to see here is that if my hard stop is at 459, 459.98, let's call it, 460. If my hard stop is at $460 here, and I'm looking to get in underneath these pre-market lows here, my realistic entry is going to be around 457.42. So I'm already assuming a risk of $1.50, right? I'm assuming a risk of $1.50. What that basically means is that if the stock goes against me and closes up $1.50, I'm going to lose $1.50 on the name. Let's take a very general example. Let's say, for example, you're a 1-lot trader where you're trading 100 shares. Your assumed risk on this trade is $150. You're not going to lose any more than $150. If your trading account cannot handle a $150 loss on 100 shares or one contract of NVIDIA, then you need to absolutely, not play NVIDIA. Go maybe play AMD, right? That's not going to have an average true range of around $1.52, right? So understand that if we're going to give ourselves a risk of $1.50, then I for sure as heck want to be taking profits at $1.50. That's a 1-to-1 R to R. Okay, if I get $2 on the stock and I was risking 150 on the original trade, now I'm looking at a 1.5 R to R, right? I'm looking at a 1.5 to 1 R to R. So what we need to understand is understand how much risk you're putting on the table. For me personally, I'm a 1-to-1 trader, okay? And typically I might hold, yes, 1 or 2 runners that go 2R, 3R, 4R, but I'm not making the majority of my money on those runners. The majority of my winnings comes from that 1-to-1 trade within 5 to 10, 15 minutes, okay? So if I'm gonna risk $1.50, even $2 sometimes, some of you guys might be thinking, wow, why would you risk $2? Because I'm a 1-to-1 trader, and if I'm trading a stock that's gonna move $1.50, $2, I have no problem risking $1.50, $2 to potentially make a 1-to-1, right? So it's on those 1-to-1s where I make the bread and butter of, you know, kind of my P&L for the day, for the week, for the month, for the quarter and year. And it's those 1 or 2 running contracts that I hold that might squeeze out 1.5 or 2 to 1, or, you know, whatever, might go 3, right? You know, 3R. We have to just understand that the runners are what's going to put the cherry on top, but your bread and butter is, you know, your calculated risk. If you want to trade a stock that has less risk, then maybe trade something like AMD. If we look at AMD's price action, we're going to see here that our average true range on AMD is anywhere between 20 and 40 cents. So essentially you can set yourself up with 100 shares on AMD, risk 50 cents. That's pretty much probably all you're going to lose on the particular trade at any given time. Maybe it's closer to $1 at some points in time just due to the high wicks and the spreads and everything else. But again, if you don't want to risk $1.50 or $2, then trade something that trades within a range, each candle between 20 and 40 cents. I hope that kind of makes sense. So also, let's make a point very, very clear. If I'm looking to take profits at $1, $1.50, $2 on NVIDIA, I can't tell myself that, well, I want to take $1, $1.50, $2 on AMD. It's impossible within the same amount of time, because the stock doesn't trade in a range of $1, $1.50, $2. It trades in a range of 20 cents, 30 cents, 40 cents, 50 cents. So what we need to be thinking on AMD is that if I can make 30 or 40 or 50 cents very, very quickly, I need to get that 1-to-1 R and then hold my runners for potentially 60 cents, 80 cents, $1. For me, if I was able to get 75 cents to $1.25 out of AMD, that's a home run for myself. I'm looking to get into AMD 10 or 15 contracts, and I'm looking to start scaling at 30 cents, 40 cents, and 50 cents. Then I will hold those runners to see if they can get 75 cents or $1. So by trading the same stocks, you're going to understand the way that they move. So a lot of times when traders, you know, follow people on social media, they get into a particular trade, for example, like AMD, because you're following someone that trades AMD and they say they're going long AMD. Let's just use a generic example. Next thing you know, you see that specific person selling out and they're making great gains on it, and you're only up 20 cents. Maybe you're only playing one contract and you're up 20 bucks. And you're like, man, how did they make $300 or $500 or $1,000 and I'm only at $20? So what do you start to do? You start to hold for longer periods of time, and next thing you know, the stock comes down, breaks you even, or even puts you into a drawdown, because you don't understand that, yes, you should be taking profits on AMD in a scalp at 30 cents, 40 cents, 50 cents. You should be locking in those profits and then holding a runner looking to try to get $1 or $1.50 or later, right, in time. But your initial move needs to be 30, 40, or 50 cents on a stock like AMD. Maybe on NVIDIA, it should be closer to $1 to $1.50. I hope this video makes sense. If you did like it, make sure to join the Discord. All of that information and stuff is down in the description box below. Make sure to leave me a comment. Let me know if this resonates with you. Let me know if this makes sense. Also been doing a hell of a lot of teaching here on YouTube as well as in the Discord. Make sure you guys are investing in yourselves and in your education. There's good people out there who are teaching real good stuff and good mindset stuff, and, you know, able to help you along in your journey. It's up to you to actually get focused and get disciplined and put in the work. Let's see you guys all on the inside of Evolution Traders, and I'll catch you guys all later.